Today's interest rate markets, I want to focus on the 10-year note. The 10-year note, pretty much a range-bound type of environment today. We saw low volumes. And again, we're rolling into Fed week, a Fed announcement on Wednesday. So it does feel that the market's kind of biding its time here now that we got through some of the issues from last week. And we certainly have seen quite some volatility rolling into this meeting with the expectations now for a move by the Fed sooner rather than later. So today we saw a range, about a 10-tick range. We saw it settle right around the 127.10 spot 5 level for the settle price, the day trading settle price for the 10-year note, a high of 127.13. Low of 127.03. So again, as we now roll into what the market has been expecting here for the last couple of weeks of this Fed announcement, you're looking at yields pushing back down to the low end of the range, and really to the low end of the range for the last 2 years. You have to go back to September 2017 to see yields here right around the 2.8 level. And now if you look at the year low, we're just slightly off the year low of 2.06. So again, the expectations are that the Fed's going to be very accommodative coming out of this meeting. Now, if you look at the CME Fed Watch tool, they're pricing in a probability of about a 17% chance of a cut in this June meeting. So low probability, and the market's anticipating that they're going to see a little bit more action in July. Now, when you look at July, the market's pricing in about a 71% chance of a move in July. And I think the market's really going to be focused on how the Fed is going to enunciate this possibility moving forward. Or are these expectations in the market off? And I think that's what market participants, market observers, and the bond market as a whole is definitely focused on that press conference on Wednesday. And I also can tell you, when you look at some of the economic numbers rolling into this, now last Friday we saw a little bit of a pickup when we saw the retail sales come in a little bit better than expected, and we saw a little bit of selling pressure on that 10-year, and we saw yields bump up over the 210 level. But now, this morning, Empire manufacturing number, much weaker than expected. We're seeing manufacturing slowing not only here in the U.S., but also slowing in China. So once again, that's the expectations, and that's why we're seeing the yields pushing back down to the yearly lows, and really a 2-year low, when we see these types of numbers leading into this Fed announcement on Wednesday.